Good morning, everybody. Welcome to the Morning Vol Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com and educator du jour at OptionPit. Welcome to our Morning Vol Report. Our Professional Trader Summit starts tomorrow. We have one spot left, I think. That's it. So if you want to, check it out. We'll have a great set of speakers, all traders. Basically showing how they do things, merger and acquisition, private equity, biotech pipeline, trading the SPX, trading SKU. Great lineup this year of speakers. Also, excuse me, lots of fun and frivolity. Now, getting to the markets, I think kind of the biggest news is Sears. Or not Sears, Sprint. Getting involved, we'll look at possible wheel trades in here, something along these lines today as they merge. Not quite sure how that's all going to shake out, but there could be a little bit of action in here as well. Our next thing on our list is just the biotechs. They're pulling back a little bit. We do have a strategy that are positioned in here that looks like it should do okay. We're kind of sitting right here at decent levels for it. I think we have a couple of potential premium selling ideas that could work in here. So that's something we'll take a look at today in the chat room. Another one that could get a little bit interesting for us here too is Apple. Again, it is really not moving. We talked about short premium in Apple yesterday, short butterfly, or just an iron butterfly in Apple as a potential trade. It is kind of stuck and not moving. So we will take a look. So for Apple, it's a little bit more vol than we normally have. We normally are seeing, volatility a little bit lower. Now we're starting to pick up earnings again. But we've had very low vol on Apple all year. There's still a little bit more. It's never recovered from this drop, so we could see something as well in there. UVXY, we did close a butterfly yesterday that had the short strike was the 9 handle, so we're going to try to set up the next terms short play in UVXY. Mostly because we just have what? We have a solid, almost $2 in future premium in the July future. And the reality is the 10 handle has been very sticky for VIX. We see the high 9s, low 10s, but that's about it. There has all that sort of the macro news with Washington, D.C., Trump, all that stuff seems to be going away a little bit. So those contango plays have still worked very well. Hedging is extremely cheap in all of the volatility products right now because implied volatility is so low. Lastly, SPX. We will do as we do almost every day. When VIX is 10, we try to price some weekly calendars. You're basically buying the holiday for near nothing. The July 05 term has the 4th holiday, and so it's going to be very inexpensive. But we could, possibly maybe a 24/40 time spread. We'll start to price some of that stuff today just because the market's holding up fairly well. And again, time spreads are very cheap, also cheap to hedge if you chose to do so. But other than that, that's about the excitement we have today. Looking for opportunity. Most things, there is just not a lot of net movement around. Maybe we see some in Sprint as the juice kind of gets perked up in there for a deal. But other than that, we just have one of those like slow meandering summer days. There's a reason the VIX is 10, and it's because realized vol in the SPX is only 6.3. All right, everybody, have a good day, and we will talk to you later.